So I hope we are going to have a good time. Again, like last time, if there is any issue, any question that you have, you can unmute your microphone, and then you will also be able to ask the question, or you can send your question through the public chat forum there, and I'll also be able to answer you. I hope that you are getting me clearly. So we are going to want us to define functional currency. Functional currency, that is the first term. Now for functional currency, this is just the currency of the primary economic environment. It is the currency for the primary economic environment in which an organization operates. So for companies that are operating in Kenya, their functional currency will now be Kenya shillings as their functional currency. The second item that I want us to define is presentation currency. Presentation currency. So number two, we define presentation. Presentation currency. Now for presentation currency, now in this case, you will find that it is the currency in which the financial statements are prepared. The currency in which the financial statements are prepared. So that currency is referred to as the presentation currency. The other term is the difference, the exchange difference. So I'll write it in short form. Exchange difference. Remember, when you're buying goods, for example, in Uganda, and you're using Kenya shillings, at times you may find that the amount that you had planned to use, you may use more or you may use the less amount. So the exchange difference is simply the difference resulting from translating a given number of units of one currency into another currency at different exchange rates. So it is the difference resulting from translating a given number of units of one currency into another currency at different exchange rates. Then the last term that I want us to define is foreign operation. A foreign operation. Now for foreign operation, it is simply a subsidiary or an associate. It can also be a joint venture or a branch whose activities are based in a country other than that of the reporting enterprise. In a country other than that of the reporting enterprise. So for example, we have organizations and companies that are having their headquarters in Kenya, but you find that they also have got their other branches out of this country. We can give an example of Kenya Commercial Bank. We also have Equity Bank, which is headquartered in Kenya, but it has got foreign operations in Rwanda, in Burundi, and also in Uganda. We have got the Nation Media Group. For the Nation Media Group, again, we have NTV here in Kenya, and then we also have NTV in Uganda. So they may consider now their station in Uganda as their foreign operation. So those are the terms that we need to be well versed of, because we'll be meeting them during our lecture. Now, the next item, I want us to look at now the foreign currency transactions. Now, a foreign currency transaction should be recorded initially at the rate of exchange. It should be recorded initially at the rate of exchange at the date of the transaction. At the rate of exchange at the date of the transaction. Now, we are allowed now as accountants to use averages when we are having a reasonable approximation of an actual amount. So if maybe the exchange rate was fluctuating during a given day, then you can use an average. But remember that now at each subsequent balance sheet, we should also be able to prepare them using the averages. Now, for foreign currency, the monetary amounts, that is the receivables and the payables, then those amounts should be reported using the closing date. The amounts should be reported using the closing rate. Sorry, not the date, but the rate. Now, for non-monetary items, for example, the property, plant, and equipment, then we record them at their historical cost. We record them at their historical cost, of which we believe that the historical cost would have been recorded at the exchange rate at that particular date of the transaction. Now, the non-monetary items may also be carried at fair values, and if they are carried at fair values, then it means that they should be reported at the rate that existed when the fair values were determined. So you record them at the rate which existed when their fair values were determined. So we can look at an example. We can look at an example. Assume that now an example involving the purchase of a plant, property, and equipment. Then we are told that Njoki Limited purchased a piece of plant and machinery from a Dutch company. So we have we have the Dutch company. Dutch is Netherlands. We have the Dutch company. And then we also have Njoki Limited. So Njoki Limited is buying items from this Dutch company, and the amount that they paid from the Dutch company was 2450, 2,450 guilders. So that is the currency from Netherlands. We assume that. $24.50 guilders, and this payment was made on 31st March 2018. So this was 31st, then March 2018. So I'll just write 18. Okay. So Njoki Limited purchased a piece of plant and machinery from a Dutch company for 2450 guilders on March 31st, 31st March 2018, to be paid for in August on 31st, to be paid for on 31st August 2018. So payment is to be received in 31st now, August 2018. That is the date of the payment. But we are told that the contract rate is 30.5 shillings, Kenya shillings. 30.5 as the contract rate. Then we are told that the exchange rate on 31st March, was 1 guilder. So exchange rate, just put it like that. 1 guilder is equal to 30 shillings. So that is what we have there. So we are told to record the entries as at now 31st March 2018. Now for this case, you will find that the plant and machinery are going to be recorded at their historical cost. Now this cost can be determined by reference to the effective selling price. Remember, our selling price now will be, we will take the 2450, then we multiply by the contract rate, which is 30.5. So what we will have now will be 2450 times now the contract price, which is 30.5, because that is what was on the contract price. Maybe to show the other slide, 30.5, which was the contract price. So if we multiply this, for those who have their calculators, if you multiply 2450 by 30.5, that will give us 74. That will give us 74,000 shillings. 74,725. 74,725. So that is the historical cost that Njoki is supposed to pay. So that is how we find that. Then now the transaction will now be recorded as, now we will debit, because the payment has not been made. We will now debit. We debit now the plant and machinery with the amount. We debit plant and machinery with 74,725. 74,725. And then now we credit the notes payable. The notes payable. Again with the same amount. $74,250. Sorry, 74,725. So that is to now record the transaction on 31st March 2018. So this is the entry as at March 2018. That is the entry that will be made. Now, if we move on now to August 2018, when now Njoki will be making the payment, then it means that now that we must have to calculate the amount that Njoki will pay in August 2018. So in August 2018, what will be paid is at the exchange rate at that particular date. So it means that now what Njoki will be paying is supposed to be now the 30.5, the exchange rate as at 31st August 2018. 30.5 and not 30, because now their contract was that the goods are delivered as at 30.5. That was the contract price. So you'll find that we have not used the exchange rate as at 31st August 2018 because there was an already existing contract. Because if there would have not been this contract, then now what the amount in the liability that Njoki was supposed to pay would have been now the 2450 guilders the 2450 guilders, then we multiply it by 30 as at 31st August. So we multiply it by 30 as at 31st August. But this should not be the case because we already have an existing contract price. So whether the exchange rate is less than the 30.5 or more than the 30.5, we will use the contract price. Remember, we said for plant, equipment, and machinery, we use the historical cost to present their transactions. So that is one, the plant and machinery. Now, number two, we move to now the payables. Payables. Now, payables, creditors. Refer to it as creditors. So again, how do we deal with the creditors? Now, to illustrate this, we can look at an example to illustrate this. So we are told that a Kenyan company purchases goods from a UK company. So we have two companies, UK, and then we have got the Kenyan company. A Kenyan company purchases goods from a UK company in July 2019. July 2019. So here we have July 19. July 19. And the price that is paid is 550 pounds. So we have sterling pounds, 550. As the amount of payment. Then we are told that the company paid off 200 pounds in August. So again, in August 2019, in August 19, the company paid, the Kenyan company again paid 200 pounds. Okay. Then we are told that the outstanding balance is paid at the end of the year. So outstanding balance is paid at the end of the year. So we assume the end of the year is September 2019. The balance will be cleared. So that means that that balance, the balance there will be 350. So this is what we have. But we are told that the exchange rates, we are given the exchange rates, that the exchange rate in July was 70 shillings. So I'm writing them here. It will mean that 1 pound is equivalent to the amount that I'm writing. So in July, we have 70 there, the exchange rate. Then in August, we have 80.1. 80.1. Then lastly, in September, 82.7. 82.7. So these were the exchange rates. Then we are told now to prepare our accounts payable account. Now remember that there is no contract price. So we will use the exchange rates for every transaction in each month. We will use their corresponding exchange rates at that particular time, like for July 2019, August 2019, September 2019. Remember, I've said that now these amounts here are the exchange rates for every pound. For every pound, these are the exchange rates. So now we have to prepare the payables account. Now, what you also have to remember is that the payables account, it is like it is the same as the creditors. Remember, creditors have got a normal credit balance. It has got a normal credit balance, meaning that an increase is credited and a decrease is debited. So we can present this. So we can have payables account, the solution, payables account. Now remember, an account has got both the credit and the debit side. So you can decide to draw that. So this is our credit side. Then we have got the debit side on this other side. So we go back to that other slide. We start from July 2019. Now in July 2019, the transaction that took place is that the Kenyan company now bought goods from a UK company at 550 pounds. Remember, these items are to be settled on a later date. So it means that now there is a liability that we have created in July 19 of 550 at an exchange rate of 70 shillings. So to record this, because this is an increase in liability, an increase in liability is always credited. So we will go to now our payables account. For then we will have now, remember, an account has got the date, the details, and then the amount on the other side. So we can have the date there being July 19 as our date. Then in the details, we have got purchases. Remember, the amounts are in shillings, so you make sure that at any given time you give the denomination that you're using. So purchases, so we are going to have 550 times now the exchange rate as at that time, which was, I think it was 70. Yes. So again, for those who have calculators, let me use mine. Yes, multiplying 550 by 70, and that will give us 38 38,500. Good. We are attentive. Please make use of your calculators. Mine is a bit far. So that is the transaction that will be recorded in July 2019. So I commend Ogutu, Steve, and Kimani Gishui, who are very attentive. Thank you. Then now, if we go back to our slide, the other one where we have the problem, we are told that now this Kenyan company settled 200 pounds in August 2019, again at an exchange rate of 80.1. Remember, the payables account is a liability account. So if we are settling, it means that we are reducing the liability. So a decrease in liability is always debited. So the transaction for August, we will now debit it. Transaction for August, we debit. So we have August 19 and August 19. In our details, we'll have cash. Then the amount now we are settling 200 at, we multiply that by the exchange rate, which was 80.1. Again, I'm waiting for the answer. I'm seeing Kiilu Benjamin. Okay, Kimani has already got it. Evelyn Duati, thank you. Mwai also, Kiilu Benjamin. So the amount is 16,020. So 16,020. My pen is blunt. 16,020. That is the transaction. Then now we were told that the remaining balance should have been settled at a later date. And remember, the later date that we are talking about here is September 2019. So our balance will be settled in September 2019. Again, September 19, we have now the balance. Remember, it has not been settled, so we cannot write cash. So we will have the balance now carried forward or carried down, and the amount there will be, now we subtract 200 from 550, so that is 350 times now the exchange rate at that particular time, which was 82.7. So what will that be? So Kiilu Benjamin 28,945, Viola Makoha 28,735, Kimani 28,945. So we are waiting. Viola, what is the problem? So the answer is Evelyn Duarte 28,945, Nicholas Wainaina 28,945, even Viola 28,935. That is a bit of a challenge again. The answer should be 28,945. So thank you, Uma Jacqueline. I've also seen you are also attentive. So 28. 28,945 as our answer. $28,945. That is the answer. So remember, we are also supposed to balance this account just like the other normal accounts. So what we will do, we will add the debit sides, the total, and we compare it with the credit side. So can you add the two? Can you add the two and give me the balance? So I'm told the balance is 44,965. The balance is 44,965. I'm waiting for the others. Others are having 64,65. Now, this is the end of the year. In September 19, we will have the balance which will be taken to P and L. So you don't write balance carried forward again. So, okay, thank you, Mwai. That is after the deduction. So P and L, the amount there is 6,465. Okay, thank you, Viola. Thank you, Mwai. Kilu. Okay, yeah, P and L 6465. So here we'll have a total of Edwin Gidaga 44,965. 44,965 as our total for both sides. Remember, the totals must be in the same line, and I'm really struggling to make sure that that is fulfilled. Yes. So that is how we deal with the payables account. I hope that we are together. If there is a question, please, you are free to post it because I'm able to look at the public chat. Number 3 or number C, now we move to receivables. So we have looked at payables. I want us now to look at receivables as our C. Receivables, the other name is the debtors. Receivables, so that is, the other name is debtors, what we commonly know as the debtors. Now again, we are also going to look at an example to illustrate for how we treat the receivables accounts in a case of foreign transactions. So again, we are assuming that we have two companies. So one is a Kenyan. We have a Kenyan company. Then we have a German company, a Kenyan and a German company. So a Kenyan has bought goods, not bought, but it has sold goods to a German company. Now we are not buying, we are selling. we are selling so that now we will be expecting from the German. And the goods that we have bought are worth DM. We are just using that as the currency, just for illustration. DM 3,000. DM 3,000 as the amount that we have sold the goods to the German company. We are told that the payment is to be received in August. So this was made in this transaction here was made in May 2017. So it was made in May 17. We are selling that in May. So the payment is to be received in August 2017. So remember, we have been given the exchange rates for May and August. Again, so I'm going to write them here, the exchange rates. So 1 DM will be 26.7 Kenya shillings. So that is the transaction. So we are told to record the transaction in the receivables accounts. The receivables accounts. So just like in the payables, again, the receivables account will also have got both the credit and the debit side, both the credit and the debit side. So we consider that. We can move to the next slide. Show that. So we have receivables, account. Again, we have got, sorry for my line. We have got the debit and the credit. We have got the credit on this side. Remember, this is a revenue. Revenues have got a normal debit balances. So increases are debited and the decreases are credited. So we start with the transaction on May 2017. May 2017, the transaction that took place was that we made sales to the German company at 3,000 DM. So we have the exchange rate at that date. So we are going to have, we are going to debit the receivables account. So we have May 17, May 17. Now in our details, remember we are selling. So our details will have, what we will have in our details is the sales. Sales. Now remember we must have the amount here in Kenya shillings. So because we are presenting in Kenya shillings. So sales, we have 3,000 times 27.3. So again, I'm waiting for your calculators. I've seen Kimani, Ilu, Owino, 81,900. Ogutu, 81,900. The amount there is 81,900. Rotich, Peritu. So all of us have unanimously agreed that when we multiply that, we get 81,900. Keep Koech, that is good. So that is the transaction that took place in May 2017. Remember, when the cash will be made in now in August 2017, now the exchange rate at that particular time will be 26.7. So in August, because now we are reducing the debtors, now we credit the debtors account. So we will have August, we credit August 2017, August 17. Now they will be paying in cash. Again, they are paying the same amount, 3,000, but now at a different exchange rate. So we are multiplying this by 26.7. Okay, so I've seen Ouma Jacqueline 8100, Judy Nzioka, Kimani Teach, Kiilu, Owino. So we have a good to 8100. So remember, Kipkoech, Nicholas, we have Nderitu, we have 8100. Remember what we were expecting was 81,900 in May. But when they are paying just the 3,000. But now we are exchanging it at now 26.7 in August. So if you compare these two amounts, there is the 8,100, there is the 81,900. So the difference here will either be a loss, an exchange loss, or it can be an exchange gain. So for the difference that I've seen there, Kimani, is it an exchange loss or the gain? I've seen 1,800. So is the difference there a gain or a loss? We were expecting 81,900, but now what we have received is 80,100. So is it a loss or a gain? A loss. So we know Uma Jacqueline, Deritu Rosemary, Kubondo Robert, we have agreed that it is a loss. It is a loss because the amount that we have received is less. It is 8,100 as opposed to 81,900. So that amount, we will take it to P and L account, the profit and loss account, and this is an exchange loss, exchange loss of now 1,800. Is an exchange loss of 1,800. So then you just get the total. The total here is 81,900. Our total there. So the double line signifies the end of the transaction. 81,900. So that is how we treat the receivables accounts. Then we can move on to the last one in D, the long-term loans. Long-term loans. Number D. I hope we all know what a loan is. Again, this is also a liability. But now the ones that are to be paid for a long period of time. So for the long-term loans, again, we can look at an example to help us illustrate how we treat the exchange differences when the long-term loan is involved. So we are told that Goodcar Limited, which is a Kenyan company, acquired a loan from a Canadian bank, So we have Goodcar in Kenya. We have Goodcar in Kenya. Then we have Canadian bank. Now the loan amount is 10,000. The loan amount is 10,000 Canadian dollars. That is the loan that was acquired, $10,000. 10,000 Canadian dollars, and this loan was acquired in January 2018. It was acquired in January 18. So we are told that the proceeds were converted into Kenya shillings and remitted to Kenya. Were converted to Kenya shillings and remitted to Kenya. So remember, the loan was acquired in 1st January. Now, the year end for Goodcar is 31st December 2018. Now we are told to prepare the Goodcar Limited loan account. And then we are also given the exchange rates. So the exchange rate in January 2018, we are given this as now $1 Canadian to be equivalent to 30. Now we are changing the amounts that are right here are in Kenya shillings. So we have 35.3, 5.3. Then we have 31st December 2018. December 18. For December 18, the amount is 33.4. Then we have December 2019. December 2019, the amount is 34.9. Those are the exchange rates. So we are told to prepare now the loan account for Goodcar Limited, the loan account for Goodcar Limited. So to prepare this loan account, again, we are just going to use the normal T formats for the preparation. But remember, the exchange rate in January 2018 is 35.3. The exchange rate in December 2018 is 33.4. The exchange rate in December 2019 is 34.9. So those are the exchange rates that we have. So we start with now the January 2018. Remember, this is a liability. So any increase in liability, is always credited. So maybe we can have the title first, loan account. So you can write Goodcar loan account. Again, having both debit and the credit side. Debit and the credit. The amounts are in shillings because we are presenting in shillings. Presenting in shillings. Now, for the increase in the liability now on 1st January, so we'll have 1st Jan 2018, is it 18 or 17? 1st January 2018. Now in the details now, for our case now, in the details now, remember we were told that the amount was exchanged into cash and then transferred. So the cash of cash now we have the $10,000, $10,000. And 35.3. So we multiply 5.3. So I'm waiting. So the money is at 353. Judy Mzioka 358. Can we confirm? Can we confirm the right amount? Owino John 353. So you multiply 10,000 by 35.3. Okay, 353. So the amount there will be 353,000. Yes, Viola 353, that is good. Leritu, okay. 353. Nicholas 353, that is okay. Then now at the end of the year, now in 31st December 2018, we need to also get the balance. Remember, this money has not been utilized, so we need to get the balance. So in now on 31st, deck 18, first deck 18, we now have a balance that is carried down because we have not utilized this. Now we'll all balance carried forward. Balance carried forward. Remember, we are carrying forward again the 10,000 Canadian dollars. Now at the exchange rate at that particular time. So 10,000 times the exchange rate at that particular time was 33.4. Exchange rate was 33.4. So again, I'm waiting. Okay. Owino John 334, Nderitu, Kimani Gishui, Kihara, Sharon, Judy Mzioka, Kipkoech, Viola. So it is 334,000. And see Akot Sylvia, Nicholas, Wainaina, Ogutu Steve. We are all attentive. That is good. So 334,000. So again, at this particular time, we have to determine whether there was an exchange loss. Remember, it is 334. I know it is not clear, but please, you make yours to be clear. 334. So we compare this in 31st December, 334 and 353. There is an exchange difference here. So can you get the exchange difference? And on the debit side will be lower than the credit side. So now we have the P and L on the same date, 31st. P and L, P and L, 19,000. So I'm told it is 19,000. Okay. So is it an exchange gain or a loss? Is it an exchange gain or a loss? Good. Beritu Rosemary, exchange gain. Kimani Gishui, gain. Ogutu, gain. Nicholas, gain. So this will be exchange gain. And our total now will be 353. Remember, this one is from this. So you don't take the total as the gain. This is 350. 353,000, sorry for that. Then we'll have the total on this side again, the same, 353,000. So again, the double line signifies the end of the transaction. Then that is not the end. Remember, we also have 2019. So it means that now in 2019, we'll have now a balance brought forward or brought down. Now in January, we start with January. In January 2019, we'll have balance brought down, balance or brought forward of 334, not the gain, because that is what is in our account. What we had here, this one here, this was the balance carried forward in December 2018. Now, when we move to January 2019, now that is what we have. The balance brought forward of 334,000 shillings. Remember, now in 2019, there is no any other transaction that took place, but we are told that now in 31st in December now, in 31st December now, we will have a balance carried forward, of now the 10,000 at the exchange rate at that particular time, which was 34.9. So that is 10,000. Okay. I've seen Rosemary has already worked on it. 10,000 times 34.9. So that is Uma Jacqueline, to Rosemary, 349,000. Wino John, Ilu Benjamin, Nicholas Wainaina, Ogutu Steve, Akot Sylvia, Ipkoech Lagat, 349,000. So again, we have to compare the 349,000 and the 334. So in this case, you will find that again, now there is an exchange difference, and you can give me the difference there. You can give me the difference there and tell me whether it is a loss or a gain. So remember, That one is always taken to P and L. P and L. So the amount there is 15,000. 15,000, I'm waiting. Owino, Loss, Nicholas, you have not indicated. Kimani Gishui, Alos, Kubondo, you have not indicated. Kipkoech, 15,000. Kiara, okay. Sharon, Alos, Kilu, loss, very good. So it is an exchange loss of 15,000. So this is a loss, an exchange loss of 15,000. I'm seeing Kipkoech, Lagat, Nicholas, Wainaina. It is a loss. Thank you. So the amount there is 349. So we have looked at all the accounts that are expected and how to record the transactions in each case. I would like us now to move to our discussion forum, and there is a discussion there. It is not a calculation, but an explanation. So again, like we did the last time, we will also do it in the timeline. So thank you for the live session. I'll take the attendance for the live session and also take the attendance for the discussion forum. Thank you, and may God bless you today.